everybody, and welcome to Chart Request Live. I am Sam Gatlin, an analyst at All Star Charts, and I am joined today by my better half, Mr. Jason Pers, a man of many talents. One of those talents is charting. I saw you cranking out a lot of charts over the weekend, Jason.
Yeah.
What stood out to you from your weekend charting session?
Oh man. Um, Energy's really standing out, right? There's a lot of
I knew you
interesting
would
things.
say that. I
You
was
you
just
knew it.
lobbing you a
Yep.
softball.
There's a lot of interesting things hanging out in the energy markets. Looking at all the charts though, but like this one, I saw you post this morning. Really great chart, Sam. Obviously not this one currently, but if you go to Sam's page, you'll definitely see a great one off of the Optima platform that Sam put up. But just looking at these types of setups, like I really think silver's still going to run. I really think the whole commodities trade is really, really, really under like appreciated at the moment. And part of the reason is like Donald Trump coming in here and being like $2,000 per person. That's pretty crazy.
Yeah,
Um,
what's the deal with that, Jason? Is that fake news? Like, it didn't really seem like real life to me when I saw
I
the
mean, it was
headline. I was
real.
like,
It was real.
no way, we've
Yeah.
already done this. We know it's a terrible idea.
Oh, it's a for us and commodity traders, it's a great idea. For the gold rush, it's a great idea. For everything else, it sucks. But the way I think about it is like I can't control what Donald Trump's going to do. If is he going to give somebody $2,000 or the next president or whoever? I can control like how I protect our money. You know, like what do we do for our clients? And being into some of these positions in the commodity sectors and so on, like you're going to outperform inflation by a ton. You're going to outperform the market by a ton probably. And so this is a good time to continue to look at these types of trades, look at these areas like silver, energy, and so on. And also the other thing with Donald Trump, another thing that seemed like it wasn't real at first. I literally looked at this and was like, I have to go through and figure out if this is even real. The 50-year mortgage rate in the United States, that is mind blowing. The first time we did, like it's funny because we see where the market's at today. I'll make this short, but we'll see where the market's at today, for example, and we go, okay, the market's in this strong uptrend. What are the reasons why the Fed would probably lower rates? Well, the market would probably go down. Precious metals would probably be going lower. There would be all these commodities breaking down. There would be stocks breaking down. All these things happen. We're not seeing any of that. But what did we see in the 1930s, or I think it was 1940s at this point, during the Great Depression, that was to kind of lift us out of the Great Depression? Well, that was things like making the 30-year mortgage rate. Interesting that happened around then, as well as the gold seizure and other things that they created more added to the money supply with. Now, today, we're going to give $2,000 out to people. We're going to create a 50-year mortgage rate, and the Fed is lowering rates, and the market's at all-time highs. This is a face ripper just waiting to happen and just a continued rally. And I think you just got to be long a lot of things right now, but I like the precious metals and the energy sectors probably the best.
Totally, Jason. I think you're spot on with that. But we are here for Chart Request Live, where our audience brings the tickers and we bring the charts. Of course, we have a mailbag that we go through first. And you can get your ticker in the mailbag by emailing questions at stockmarketmedia.com. And once we're done with the mailbag, we'll hop over to the YouTube chat and go through some tickers over there. I see we have Joshua, we have Frey Lee, we have Melanie in the chat. So appreciate all of you being here for Chart Request Live, and we'll get to your tickers soon. But Jason, what is first up in the mailbag today?
So today we have Chris, and he says, with energy starting to move, is it time to buy MTDR as the ticker, or plan to hold it for several years?
All right. That's a good question.
MTDR.
Thank you, Chris, for the ticker. So we're looking at MTDR here. This is Matador Resources. This is a nearly $5 billion integrated oil and gas stock. Is this one from the US? From Dallas, Texas. All right. And it has a nearly 4% dividend yield. So you'll find a lot of that in the energy complex. I already have this one marked up as a potential, not a top pattern, but I'll just delete those and get started from scratch here. Zooming out on this chart structurally, this is This is a classic, not a top pattern, Jason. So you have this shelf of former highs from 2014 all the way until 2018. So a lot of market memory here. Let's see, I'll just draw it up here at those 2018 highs. And then you can see how that former resistance over the past few years has slowly but surely been turning into support. You've seen a lot of this in energy, especially like just like the crude oil chart. It's been turning all of that former resistance into support, and it's been a, a long process, but it's been playing out just like how you would have expected from a technical standpoint. And this is kind of interesting. You can drop this anchored VWAP from the COVID lows, and that comes in right around that same level. So, you just have a real confluence of support here at, let's call it like $35. So, you have $5 of risk in this trade, and, you could potentially make 30 points to the upside just to get to the upper bounds of this range. And if you get to the upper bound, you're probably not stopping there. You're probably going to new all-time highs in the Matador. So, Chris mentioned holding this for several years, and I think this is the perfect pattern for somebody with that kind of time horizon. Buying the lower bound of a very well-defined range. I like this trade a lot, Jason.
Yeah, I mean,
we're starting today's show with energy. That's awesome.
Yeah, we keep talking about the energy sector, and there's just so many things kind of to look at here that are just good stocks that are just gotten beaten up because the sector has been getting beaten up for a while. If you're trying to buy like catch-up trades or buying the laggards to leaders, like this is a good one. I really like the pattern here. I really like the support holding. Like one of my favorite patterns of all time is always resistance turning into support. Those are usually the strongest support zones that you're going to see. And it also mainly happens during major primary uptrends. So this looks like it's just flagging out, going to move higher. I like it a lot.
Totally, Jason. And, my favorite thing about this is just the risk versus reward. Like you have a very well-defined risk, 5 points, and a very well-defined reward, 30 points. So like that's a trade I'm willing to take all day, every day of the week. So I like this a lot.
Yeah, small risk, put a stop right at that 33 level, like boom, let it run, see where it ends up. Could end up at 60, could end up at 100. Sam and I always make the joke that at some point we're going to laugh at the targets we used to have, saying $60 for this stock when it's probably going to hit like 120 in a couple of years. It's probably going to be laughable at some point. So I definitely love this trade.
Totally. Got to get to 60 first though, Jason.
Got to get to 60.
What else do we have?
So here we go. We got Meta. Meta is next. Joe said, I've been holding Meta for about 6 months, and I'd like to hold it for another year. What do you think?
Yeah, I don't know. I was looking at this chart over the weekend, and I'm leaning more bearish on it, Jason. Like look at this this monthly PPO in the upper panel here of this chart. You can see
divergence.
Yeah, man. Yeah. So it crossed to the downside earlier this year. And like everything else, it ripped off the April lows, but you never got confirmed new buy signal from this monthly PPO. So to me, it seems like, the sellers are stepping in at these levels in the Meta platforms and trying to carve out a rather massive top. And just zooming in on the Meta too. This earnings reaction from, let's see, that was Thursday, October 30th. It wasn't really a bad earnings report from Meta. Nothing was particularly terrible, but man, the market hated it. The stock fell over 11% in reaction to that report. So, yeah, it's tough for me to be too constructive on a chart like this. And, it's been underperforming quite significantly over the past few months. So here is Meta relative to the S&P 500. You can see it just looks a lot worse than that absolute trend. So, from a relative strength standpoint, I don't really see a reason to be involved in the meta. I would be more of a buyer down here at this former resistance from the prior cycle, kind of like what we were talking about with MTDR, betting on that former resistance turning into support. And right now, we're just not there yet. I think there's further downside to go in the meta platforms. And, we were just looking at the relative trend there. The absolute trend could easily catch down to the relative trend, and you could see Meta trading at, $400. Like that sounds like quite the drop from here, but man, this one got absolutely crushed in that last bear market. So like we know for a fact that when Meta is trending, whether it's up or down, it really moves. So, and just looking at the Fibonacci's here as well, this retracement of the entire bull market, I think this 61.8 retracement could easily be achieved. So, it's not a great looking chart, Jason. I'll be honest with you.
It's a tough one because it's like everybody wants to still be involved with some of these stocks, and once again, there's nothing wrong with that. If they're in uptrends and they look good, great. But however, we keep seeing this cycle rotating, right? Something that's important to think about when, especially with you're talking about time frames. Like one is you don't want to take, if you took this trade, let's say you took this trade, I don't know the exact time frame, but let's say you took it a few months back and you made some money on the trade. Let's say you took it, a year back, you made some money on this trade. And you were like, I'm planning to sell it at this point. I'm planning to use this signal. I don't like the idea of anybody ever saying, hey, I like this stock. I've been in it for a while. It's made me some money. Now that it's pulling back, I think I want to hold it for another year or 6 months. Like that's taking one of the trading principles that is very important, which is understanding that you're a trader, not an investor. And don't let yourself as a trader turn into an investor. The reason why I say that is it happens where you're like, okay, well, I'm going to hang on to this thing all the way down to the bottom and just let it go up. And then you think you're a genius, but you're also missing out on the fact of the opportunity costs. Like, for example, from 21, 22, that drawdown, if you hold on to it, like, yes, you made money over a long period of time, but if you would have got out of it and taken other trades, you'd have made a lot more money than hanging on to something. So I always just like to say that as well. But the way the market's rotating, I think Sam could be right. But I also see like the AI trade, the technology trade, and so
totally. Like this is a great American company, Jason. Yeah. This is $1 trillion stock. Like this isn't going to zero. It's probably going much higher over longer time frames. But just looking at the chart as it is now, like I could see a further corrective wave taking place here in Meta. And just remember where this one has come from. Like back in late 2022, this one was at like $90 and it went to like $800. So like it's been a hell of a run in the Meta, but just it's probably time for the sellers to step in here and distribute the stock for maybe the next 6 to 12 months or so. So
yeah,
I don't see much reason to be excited about this one over the next year.
I agree. So next one, Hansen said long SITM 3-month time frame.
I think this is like small cap tech, if I'm not mistaken, one of the largest components in the PSCT. I was looking at those over the weekend as well. Yeah, $8 billion semiconductor stock. Let's see. This one is from Santa Clara, California. Big shout out to Santa Clara. And yeah, look at this base, Jason. We have a massive uptrend from post-COVID. So the SITM went from $15 to like 200. Let's see. No, this is like 340. So over 2,000% in that post-COVID bull market. You've just been correcting sideways for the most part for a long time. This looks, kind of like the IWM. You can overlay I'll do that real fast so you can see what I'm talking about. So, peak back in late 2021 into a massive sideways range. You break out, you retest it. Now you try to break out to new all-time highs. I'll get rid of that blue line. But man, let's look at SITM relative to the IWM also to see if it's breaking out to new all-time highs yet. And you can see It looks just about identical to that absolute trend, so that's fine. You want to see that relative trend break out if and when this absolute trend breaks out. But for me, I want to buy strength above that prior cycle peak with a target of that 161.8 extension level, which I'll draw right now for you. And it looks like close to 500 is that first target. So, this could be a huge mover. Small cap tech is the place to be right now inside of the small caps. So I like this a lot. And it's a semiconductor, Jason. Semiconductors continue to make new all-time highs in relative terms. So, certainly a leadership group right here. So shout out. Who brought this one along? This is a great chart.
It's a great chart. This is a great setup here. I mean, it's probably going to just go to the moon after this. Like, that's something that
seriously, yeah, this is a massive base. And look what it did in the post-COVID round. 2,000%.
Mm-hmm. It's wild. Like, this is a great setup. These breakouts, like getting above those levels over 334, that's where you buy the hell out of this thing. I mean, most people will be like, oh, I'm going to wait for this, or breakouts pull back and so on. You could say a million things and explain away things. However, like, you have to take that trade when it comes. Like, if this is a stock that's you want in your portfolio and something you're trading, there's a level 342, buy it over 342. Like, just keep it simple. Buy it over 342. I would put a trailing stop in there. This is a pretty volatile stock, so it'd be pretty wide. And I would let that thing run and look for those targets to get hit.
Totally, Jason. Yeah. Great chart. Who brought this one along?
Let's see. I think that was, was that Hanson? Yeah, Hanson. Yep.
Hanson. Wow. Early leader for a chart of the day.
Mm-hmm. Nice. So far, so good.
Yeah, I love it. What else do we have?
So Let's
see if we can find a better chart than this.
So we got some in the chat. So first one was Free Lee with TAC.
Okay. So TAC, what is this?
I don't even know what it is. Never heard of it. I mean, I could say that for a lot of things.
TransAlta. I have it marked up on here. This is a $4.5 billion utility stock. They do wind, hydro, gas, and coal. Okay. From Canada. All right, this is interesting. I have a lot of markups on this chart, so let's just get rid of that. Work with a clean chart here.
And Sam always says, like, I don't know if I know what this is, and then you go to it and it's already marked up.
Yeah.
You are such a killer with stocks, man. You know all these.
Let's see. Let's fib it out from that great financial crisis peak and see if we can get a nice retracement level to trade against in the TAC. And let's see. Let's throw up the retracements here on my chart. Yeah, man, you're right at that 38.2 retracement. So super clean level to trade against here at $16 in the TAC with a target of 24. You could call it just a little shy of 24, call it 23. Lines up better with these former highs from 2010 and 2011. But yeah, man, this looks fantastic. And from a relative strength standpoint versus its peer group, the XLU, TAC is climbing out of a massive base and, taking on a new leadership role inside of utilities. So, I like this a lot. It's not a speculative growth stock. It's not going to double in a few months or anything like that. But, this is a clean chart with a very good risk versus reward where you could make, let's see, this is 16 to 23. That's like 40%, a little more than that, 45%. Yeah, I like this a lot.
Yeah, this is a good one. I mean, there's going to be a bunch of things in there. Keeping the up with, we got a bunch of tickers. We're going to get to, I think we can get to most of them out here. But one that goes, it's another coal player that was asked for is BTU.
Ooh, this BTU. Is a little spicier than the TAC.
Yeah, I
Uh,
like I like this one. This is one of mine. I like this one a lot.
so, right now it's tough to be too constructive on this chart. It's running into these former highs from 2022. So, this is exactly where the sellers should step in on the Peabody Energy. Um, but if you look at its peers, something like HCC, I think this is much more interesting. Already getting above those former highs and breaking out to new all-time highs decisively on the heels of an earnings report. This one crushed its earnings. Beat the EPS estimate by over 300% last Wednesday, and it rallied 23% on the heels of that report to new all-time highs. So like this is what I'm more interested in. And yeah, I think BTU will end up looking like Warrior Met Coal soon, but like that's just not the case today. You need to see all of that overhead supply be absorbed by the market. So a close above, let's call it $33 in BTU. That would get you to this former high from 2018 at $48. So, the setup is there. You just need to see the buyers take control of it. But for now, more of a neutral bias in the BTU.
Well, we are hitting 52-week highs there, and that is significant. So I do think
Yeah, I think the new breakout is coming.
yeah, I think
Totally.
there's a significant momentum behind it. I think it should possibly continue. And Sam, you highlight this a lot too, which is when you see something like this one candle basically poking out there, there's not a ton of resistance at this point. So it could just blast right through it pretty easily. So I think it's something that Sam is right. Waiting for that secondary breakout, getting above these major levels is always going to be the easiest way to take this trade. But I think it's going to hit those levels and probably blast right through it pretty soon. So continue to keep that one on your radar. Take the trade. What's the level that people are looking for?
It's this high from April 2022 at $33. So,
$33. So,
you are just a nose hair away from breaking out.
yep.
But, you need to see confirmation before getting involved because, until proven otherwise, this is resistance right here that you're running into. So, you don't want to step in front of that resistance. You want to let the market prove that it's ready to go.
And Nicholas,
But I think it's coming. Look at its peers, look at energy. Just as a whole, I think coal is one of the best places to be inside of energy. So, I like this setup quite a lot.
great point. I definitely like coal right now quite a bit. So next one is Nicholas. He said frog. So frog.
Okay, all right. I love the
Everybody
frog.
likes the frog lately.
So this is Israeli software, $7.5 billion. Let's see what they do. Yeah, fancy software. It says it's from Sunnyvale, California, but this is in the IZRL, the ARC Israel fund. So I'm not sure what the deal is there, but I think there's some type of tie to Israel with the frog. And this one, man, what a ripper you've seen this month. 35% this month as it's decisively breaking out above last year's peak. And I bet it's running into the 61.8 retracement now of this entire drawdown. So, yeah, man, right there. So, like, this would be a really logical level for some sellers to step in on the frog. You've had a massive move out of this base. I wouldn't get too greedy here. If you zoom in on the daily chart, I'm sure, yeah, man, absolute face ripper over the past few days after last week's earnings report. You got 27% as an initial reaction, and you're getting follow through today, another 7%. I can throw up the 14-day RSI. I almost guarantee it's above 80. It's right there, 79 and a half. So, this is certainly not a place I'd be looking to buy. If anything, I'd look to, take some type of tactical short against this. At the 61.8 retracement level, this is very well defined, 65. So, You could risk less than $1 and potentially get a corrective wave back towards the 50s. But man, just more zooming out structurally, like this looks incredible. Like I think this could consolidate here for a little bit and then just break out above 65 and go right towards 95. So, there's something for everybody here. Like if you're tactical, I'd look to take the other side. And if you're more long term, wait for a consolidation and a breakout above 65 and continue to ride this primary trend higher because Frog is, I can look at it relative to IGV, which is the broader software complex. And, Frog is certainly a place I want to be inside of software. This is a leader. Look at it climbing out of this massive base versus its peers. So I think Frog is going to be a leader for the foreseeable future, but right here, right now, I have a hard time entering a trade with the RSI at 80.
Yeah, I mean, for me, it's if I see a candle that strong, I wouldn't even think about I know Nicholas said feeding the ducks, and you mentioned like possible quick short. It's just for me, it's like that's such a strong candle, and like what we're seeing here is like very significant. So.
Totally. It's the Kenny Glick mentality, though, Jason. You get
the kids like the shorts. Yeah. You're right. I'm getting old, Sam. I'm getting old with like,
and like it's probably gonna last a day or two. Shorting is short-lived, and you're gonna die, right?
Yeah. I'm just not that quick. I'm not that quick. I'm not that tactical of a trader. So like for me, it's more of like, hey, that's a really big candle. As you would say, a god candle. Looking at that type of candle, you could get major follow through there. Once again, that's a very significant level for the 61.8 retracement. That's usually when you're going to see a sell-off if it's going to happen. But damn, that's a strong candle.
Yeah,
there's a lot of interest in it. And is that November? Is that just November?
This is the November candlestick. And remember, like this one's just had earnings. Okay. I can look at the earnings reaction on the other screen here. I bet this was like the best earnings reaction ever for the Frog. I can tell you right now. This was looks like the second best earnings reaction ever. The best one ever was in February 2024 when it rallied over 28% in a single session. But, this one's been rewarded for its last 4 earnings reports. And, you love to see that fundamental confirmation along with this beautiful technical setup. So, like I said before, there's something for everybody here. Long-term traders should be looking to buy. Short-term traders should be looking to sell. That's how I see the Frog.
So let's end on going through. Melanie said, how do you feel about uranium stocks at this point? Do you think there's more upside for stocks like CCJ or UEC?
Let's just look at the CCJ. So this
CCJ is the best one to look at. Yeah.
This is the ExxonMobil of uranium. This is the largest by far. $41 billion in market cap. You have a trailing 12-month PE of 100. That's pretty awesome. Good for CCJ. And this is from Canada too. So shout out to Canada. This is the second Canadian stock we've looked at on today's show. So I love it. I wish you all would bring more Canadian charts. Canada is doing something right. They have a lot of good looking charts right now. And so CCJ, I mean, you can get tactical with it, but for me, this is more of just like a secular trend that I'm interested in the uranium. And, you got that massive base breakout above the 2007 peak earlier this year after that Trump dump in earlier this year. And since then, it's just been pretty much up only. And you have ripped right to that 161.8 extension level, and you went right through it. And now you've corrected, back to it, turned that resistance into support. And here you are bouncing off of it today and ripping almost 3%. So I could look at look at this daily RSI bouncing off of 50. That's what you love to see in strong long-term uptrends. You get overbought, you get above 70, then you pull back to 50, then the buyers step in there, you get it back to overbought. That's just what we've seen in CCJ for going on. Let's see, ever since that April low, man, that's been the case. So like this is one of the longest one of the strongest uptrends in the market right now, and it certainly isn't a thing I want to fight. And I think CCJ is probably going to 137. I have a hard time thinking anything different as long as it holds above this 87 level. Yeah.
Go back kind of far,
gold.
Sam. Go back, look at the chart, like long term, show the old uptrend from the 2000s.
Yeah, man. Yeah, that's a great point, Jason, because this one, man, like gold did in the early 2000s, it just went straight up for a decade.
These things bottoming out, like all like the way they work is like you get these crazy moves in these sectors. Like look at that, that's 3,000%. Like you're gonna get these crazy 30x moves in these sectors. Like sometimes you get, like taking the trades, like you're gonna look at this and go, wow, this is really strong. It's gotta stop. It's kind of like similar to like the way people look at the AI trades. Like it's gotta stop. It's gone up a lot. This sector looks like it's really just getting started. If you go through the whole sector and look at all the individual stocks, it looks like it's really kind of just getting started. That breakout above that level from the 2008 financial crisis, once we got above that, it's really just all blue skies ahead. And I think this thing could definitely hit 137 pretty easily, probably 200, probably 500 at some point.
Yeah, man, this is a secular uptrend. You don't want to get off of it too soon.
You just don't know when it's going to end.
Yeah. Totally.
So I love these trades. I think that uranium still the question was, is uranium still a sector where, I'm looking at? Yes, absolutely.
Hell yes is the answer.
Yes. Hell yes. Hell yes. Yeah. Hell yes is the answer. Let's see where this ends up. But all these stocks inside the sector look really good. The US producers look really good. The Canadian producers look really good. Like it's an area where I still want to be long.
I think we'll finish with this chart, Jason. Something to watch this week. So, inside of uranium, you have like CCJ, which is like the Exxon Mobil of uranium, but then you have like these speculative AI utilities that are using nuclear energy, and like Oklo has really been the poster child of that trend. And this is $16.5 billion in market capitalization. They have zero revenues right now, and they continue to be rewarded in spite of that. But more short term, you have kind of a tactical top carving out here, and you have earnings tomorrow in the Oklo. And if you are an AI utility bull, I think this is a really important chart to watch, and you don't want to see this just get blasted below these pivot lows from October. Call it like 105 in the Oklo. If this is getting blasted below that, that's a bad sign for these speculative AI utilities that are using nuclear energy. Now, I don't really think that affects something like CCJ as much. CCJ is a real company doing some pretty cool things, and I have a hard time believing Oklo has too much of a correlation with CCJ, but something to watch. Oklo's earnings report this week. These are some of the hottest speculative growth stocks in the entire market. So, yeah, this was an awesome episode of Chart Request Live, Jason. We got to look at some Canadian stocks, some coal, some energy, some Israeli software. So, huge shout out to everybody for making this a great show. Thank you for being here. We've got Bill, we've got Nicholas in the chat. Melanie, Frey Lee, I appreciate all of you being here for Chart Request Live. We'll be here again next Monday for another episode of Chart Request Live. And as a reminder, you can email us your tickers at questions@stockmarketmedia.com, and we'll put your ticker in the mailbag for the next episode. If we did not get to it in the YouTube chat today, but yeah, this was awesome. Thank you all for being here.
Yeah, thanks for joining us, guys.
Adios.